Small caps have really captured investor interest this past week. As interest rates have come down, it's made small caps more attractive to investors. And you're seeing a rotation out of big cap stocks into small caps. It's been something that hasn't happened for a while. Small cap stocks have really underperformed the rest of the market for some time. The way I count it, about 20 months, small caps have not done well. It's probably because in the last 20 months, interest rates were quite high. As small cap companies need to borrow money, they don't have the history, the credit rating to borrow money at a reasonable amount. It puts big cap stocks at a big advantage where they could have borrowed the money far lower rates. That said, now that interest rates are coming down, it makes these small cap stocks more interesting. It makes the finding of stocks that are really growing their revenues. They have very good profitable businesses in industries that are going to have really long lasting success. It becomes a far better idea. I look for small caps that have all the same characteristics as they always do. First, I want to really buy into the business. I want to believe in the company. I want to make sure that company has competitive advantages that will keep their competitors out of their industry, out of their market. The reason for it, the stronger the company is at fending off competitors, the better revenues they'll have, the better profitability, because they don't have to cut their price and cut their margins to compete for business. The fewer competitors, the better the margins. Also look at balance sheets. Small caps that have too much debt are a bad idea. Too much debt can cause a good company to go bankrupt. And you may have a good idea that never worked because the business went bankrupt. Valuations. I still value small caps using the same process and discipline, looking at free cash flows and making sure those cash flows are really good and that they more than cover the stock price. If I look at a net present value of those free cash flows that I expect the company is going to produce in the future, I look at earnings per share. Now, small caps may not be profitable yet. So some small caps may not have earnings per share. And I'm willing to accept that as long as they're producing free cash flow. Some businesses like Uber, they were generating free cash flow before they were profitable. Airbnb generated free cash flows before they were profitable. Those are great businesses that are now well above the small cap level, but show that those businesses were really valuable based on the free cash flows. So it's the same process that I use with big caps. A couple of things that I'll point out that I want to make sure small caps have. First, I expect a higher discount when I do a valuation. The reason for it is a small cap stock comes with higher risk. We all know Microsoft. We all understand it. It's a very good credit worthy company. So the amount of risk I take should I buy a share of Microsoft is much lower than if I buy shares in a small cap company that no one's ever heard of, that doesn't have a great credit rating. So my discount on the stock price has to be much higher. I'm really aiming to have great appreciation out of small caps. I don't buy small caps just to play in a particular industry. There needs to be a purpose, a high yield, high appreciation purpose. Some of these small caps will not make it. That's the reality. But if you have a nice basket of small caps and a couple of those companies really do make it, it could really make the investing in those companies worthwhile. I have a few examples of companies that I currently own or I have on my watch list that are in the small cap basket. The first one is USB, US Bank. Now, this one, we could argue that it's not a small cap, might be a small medium cap stock, but this is a regional bank, a little bit bigger than a regional bank. And their fundamentals look excellent. They also pay a really good dividend. I've owned USB in the past, and I think it's a really good idea to consider for my portfolio going forward. DocuSign. This is a clear leader in the digital capture process. Just about everybody's heard of DocuSign. They are the clear leader, and they have market share advantages against all their competitors in that space. Now, this company, the drawbacks are their addressable market and their opportunity to grow into other products may be limited, but they have great revenue growth, great profitability. They generate tremendous cash. Overall, their valuation is really good. I believe the stock price is currently discounted. And I believe that DocuSign is a prime target for an acquisition. So this would be an interesting stock to hold And potentially in the future, they get acquired, and that acquirer pays a really handsome premium on the stock price. United Therapeutics is a small cap that is a life sciences company, a pharmaceutical company. They're doing some really interesting things at that company. First, they have a very successful franchise of drugs that help people with rare diseases. They generate very good free cash flow, very good revenue growth. But long term, this company is trying to grow organs in a laboratory that would at some point be transplanted to a person that really needs that organ. And they're on the organ donation list. If United Therapeutics is successful, they're going to help a lot of people extend their lives with these organs. If they're successful, just imagine the revenues, the good that this company could do. So I'm excited about that small cap stock. I'm glad that I own it. Catalyst Pharmaceutical is really successful. They're not the biggest pharmaceutical company in the world. They're a small cap, but they certainly are growing their revenue. They're profitable, generate free cash flow. I really like them in my portfolio. For some reason, that stock price, it goes up and down. Although their revenues are consistent, it seems that it's a small stock, so investors forget about it or it gets discounted. Well, now that interest rates are dropping, I think they're going to get more attention. I'm glad that I own Catalyst Pharmaceutical. Zim is a ocean freight company. They're known for moving freight around the world, from China to the US, from China to Europe, all over the world. Zim ships carry cargo and get cargo from wherever it's manufactured over to its end market. They had a great period of revenue and success during the supply chain constrained years, which were a few years ago. And shipping rates were really high. Shipping rates have settled down, and now Zim is at a big advantage because their ships are newer. They bought new ships with all the money they made 3-4 years ago and have a competitive advantage against their rivals by having more efficient ships. Shipping rates have risen due to global factors, and Zim is producing very good free cash flows. They're paying a dividend, and I think they're set to really impress and surprise to the upside on earnings calls. The stock is really doing well if you look at the 1 year return or the year to date. I think there's much more to go. Small caps don't get the attention and respect, and companies like Zim, when they surprise to the upside, their stocks really fly up. And the last stock I'm going to cover is Chegg. This is an online company that helps students with tutorial services, educational services, so they could learn really difficult subjects. Being a father of two sons, I just think that the education process is really challenging for kids. They learn so much. I always think that my kids are learning far more than I had learned at their age. And that type of stress on those kids causes a big need to have a company like Chegg. Chegg has really led in the providing of services to students, both in high school and college levels. And they have kind of a social economy where educators and people that have the right knowledge could actually provide content. And that content is then reviewed by users, and certain ratings are given to the content, a little bit like YouTube, which you're watching this video on. And I think that's really exciting. I think that type of sharing economy, sharing of knowledge, and where the users of that knowledge could then vote and review and acknowledge, hey, this is really good content, or this is a really good content provider. I think all those things have a lot of upside. Chegg has been beaten down. Their stock price is really low. And the reasons for it is that AI could replace them. But Chegg is really working hard to make AI an opportunity and make it a product versus it just being a competitive threat. Chegg stock has really rallied since the small cap rally started. Their stock went up 30% in just a couple of days. It settled back down, but it really shows that not all investors have forgotten about Chegg, and there is a lot of potential with that company. I really like that Chegg does produce free cash flows. And if you do a valuation on free cash flows for Chegg, I think it really shows that it's a highly discounted stock. If they can show growth in the future, look out. This is going to be a very valuable small cap stock. So that's 6 examples of small cap companies that have potential. Again, small caps will have more risk, and one should expect a higher return than big caps. And that's all reasonable, and it should be taken into account. As always, I make no investing recommendations. I offer no financial advice. I'm just sharing with you my analysis, my observation, and my experience. And I hope you found it interesting. Let me tell you about a couple of sponsors I have. I do all my analysis now on Seeking Alpha. It's a great platform for investors. If you'd like to try it out, there's a free trial available. You can find details on that free trial in the details of this video. I'm also sponsored by Moomoo, who provide really nice offers to new account holders, where they'll pay you 8.1% on cash. They'll also give you 15 free stocks if you open an account with $1,000 or more. Take a look at those two sponsors if it's something you're interested in. Thank you for watching, and good luck investing in 2024.